Futures are up this morning on the first trading day of the month. Again, it is September 1st. Yes, can't believe it. Trying to digest that right now in my mind. Okay, the NASDAQ seeing its worst month of the year so far in August, but still pulled out a little bit of a small gain. As you can see, there are your markets for August. So, look, it's been an interesting month. We'll leave it there. Let's bring in Oxbow Advisors Managing Partner Ted Oakley. Ted, hey, good morning.
Thanks, Cheryl.
Well, September 1st, here comes the fall. Looks like, market volume will start to pick up. Vacations are ending. What do you think that's going to mean for the market?
Well, I think as people come back, they're going to realize they've sort of, I think, been a little mesmerized during the summer. But when they get back, they're going to realize that some things are slowing down the economy. And they're going to probably take note of that, and we'll see how it pans out. But I think this fourth quarter starts to show some weakness in the overall economic picture.
You think that's going to affect the markets then?
I do. Eventually, yeah. I don't know if it's in September. September is the weakest month of the year, but I think it is coming.
I don't know. This has been an interesting year. I feel like so much of the time that the year that we thought we were going to see, even, we were expecting maybe negative GDP, recession talk, that's all kind of disappeared, which is a good thing, I suppose. I want to bring in Ryan Payne. He's on set with me.
Yeah, to Cheryl's point there, we look at that quarterly number for the GDP now. It's at 5.8%. We're going to have the jobs number today. It's still going to be relatively strong. So it seems to me like everyone anticipated a lot of weakness this year. And if anything, the economy has dismayed all the experts. Why can't that continue, especially with earnings starting to look like they're revised upwards going into the end of this year and into next year? It almost seems like Goldilocks is here.
Well, I suppose somebody could think that. The main point is that if you look underneath the hood and you look at PMIs and leading indicators and job openings going down, a lot of things, and consumers really, really stretched, having to really use cards, all sorts of things going on, delinquencies going up. I'm not certain people are really noticing. I don't know if they're not noticing it or they're just feeling like, hey, the market's okay, so I'm all right. But we don't feel the same way. We feel like that you're going to still have some economic trouble. I know it's been longer to play out, but that doesn't mean it doesn't come. And a lot of the major indicators that pre-run economic weakness are still out there, and they haven't changed at this point in time. So I think for people to give up on slower times this early it could be a fake out for them.
Interesting. Okay, let's talk about the August jobs report. We are going to get that number in 2 hours from now. Economists expect the economy added 170,000 jobs, the rate holding steady 3.5%. So, Ted, what are you expecting? Because one of the outliers for this report could be the Hollywood strikes that we're seeing. You've got the SAG-AFTRA strike, the writers' strike. I don't know if that's going to play in. It's possible. What are you expecting?
Well, Sherry, that's one item. You could have yellow freight. There were a lot of people there, too, that came off. There's 3 or 4 things happened during that period that may affect it. So could be. I don't think it's going to be major either way as far as affecting the markets, but that could certainly have changed the number.
Okay. Let's also look at some other factors here, because we got inflation data yesterday, and that certainly showed us that inflation is not going away. And that gauge, the PCE price index, what we saw was that it actually rose from a month to month. The number rose from the read we got for July versus the read we got in August anyway. The expectations were a different story. So if you're Jerome Powell right now, you've got a meeting coming up this month in September. In his mind right now, what do you think he's saying to himself?
Well, what he keeps saying, I don't know if he's saying to himself, but what he keeps saying is, hey, that number has to come down. We're not going to loosen anything until we get that number down. And right now, they're on a short fuse, so I don't think they obviously can get that number down between now and the meeting. So my guess is he's got a decent chance of raising them again. I wouldn't know. I really don't even have a guess, but I would get, if I had to estimate, I would say they'd try to raise it again.
Yeah, well, and you're right to your point about what he says. When he spoke at Jackson Hole last Friday, he did basically say, in not so many words, that inflation is not where they want to see it, and that means, here comes another hike at some point. Whether or not it's, this meeting, who knows? Ted, any final thoughts on where you're putting your money right now?
Well, we have a lot of money short term, actually, in the 90-day and 60-day Treasury. And I think people have to be aware that, hey, if I can get 5.5% right now in a 90-day Treasury, why wouldn't I think about putting quite a bit of money in there and wait till some of these unusual times pass by? That's where we are, basically.
All right. Ted Oakley, it's always good to see you, Ted. Thank you.
Hello everyone. I just want to say, if you like this video and you want to see more of this type of information, because we really try to get the information that you don't see from anybody else, then be sure and click on subscribe and you'll see more of what we do here at Oxbow.